Good morning, traders and investors. Thanks for tuning in on this Tuesday, April 22nd, 2025. We got a packed show for you today. Kind of kicking the earnings season off here this week. Of course, we've had a bunch of earnings previously, but kind of getting kicked off in earnest. We're going to go over a bunch of reports from overnight and this morning. We're going to preview Tesla earnings, which are tonight. We're going to talk about the price action overnight. Seems like a potential deal with U.S. trade in India could have popped stocks overnight. We're also going to talk about solar tariffs, maybe talk a little bit about Bitcoin and gold. A couple of earnings just to preview at GE, Northrop Grumman, Lockheed Martin, Raytheon in the defense aerospace space, Verizon, 3M. Again, we got Tesla tonight, expecting an 11% move there. Maybe talk about a little bit about rating changes a little bit later. Our guest today at 8:35, Mish Schneider. She is chief strategist at MarketGauge. Let's get it going here, folks, on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Christian Fromhertz, how are you? Good morning, sir.
Good morning, guys. How we doing? We got a little bit of a bump in equity futures. Let me give a quick rundown of what the commodities are doing first. You got crude up 1% this morning. Nat gas this morning. I'll bring this up here in just a second. Nat gas this morning is down, or excuse me, up about 1/3% this morning. Gold, once again, catching all the attention. Another interesting move overnight, up 1%, but off the session's high. Really started to accelerate around the China Open once again. Look at that move up there in gold, up another 1%. Silver, a lot of people starting to look and say, hey, what's silver doing? Is that going to wake up a little bit? Up about 1/3%, still has some resistance to get through. Let's go over to, let's talk about copper first, and then we'll go to what the bond move is. Copper, you got up 1.4%. So nice little move from the lows that's happening over the last week. Let's get over to what the bond market is doing this morning. Catching a little bit of a bounce this morning, not much after yesterday's sell-off, up just 0.2 of a percentage point there in the 30-year bond futures. Bitcoin got a lot of attention yesterday. It's definitely on my radar as well today. I'll be watching 88,270. That's a big level. Also, the 50-day moving average coming into the picture there, up another 1.6% this morning. Also like to see if we can get above yesterday's highs as well. Let's move over to equity futures. Catching a little bit of a bounce this morning, but no change in trend. Still sits below the 5-day moving average, but up 0.7 of a percentage point. NASDAQ futures this morning, off the session's highs a little bit, was up about a high of 1%. Now up 0.7 of a percentage point. Also bouncing after yesterday's big down move, still below that 5-period moving average. And then Russell futures, which continues to see a lot of put activity, up about 1%. So outperforming a little bit this morning, but also still below 5-period moving average. That's your quick rundown of commodities as well as what equity futures are doing. Good morning, guys.
Thanks, Christian. That was good. Let's bring Triple D in. There he is. Triple D, how you doing this morning?
Oh, so tired. I feel like Christian did yesterday. It's not jet lag. It's self-induced sports
What'd you do?
lag. What's with these 10:22
Oh my gosh, Dennis.
starts? 10:22 start.
10:22.
10:22 start on the Oilers game last night. So you're watching, and then it was just a tire fire. They couldn't do anything in the first and the second. They finally get a goal. So down 4-1 going into third. And then McDavid comes through, brings them all the way back to tie it 5-5 with a minute left, and everybody's going nuts. And then a fluke goal, and they lose. And it's like, isn't that the way sports go?
Oh my gosh, Dennis.
One of the best comebacks it would have been
That's
in a
the way
long,
she
long
goes.
time. And fluke goal, and they lose. And then you go to bed mad, tired, and grumpy here this morning. So that's where I'm at. Trying to forget. Sports ruined my life.
Oh my gosh, you're fine, Dennis. Let's talk.
Playoff
Let's
time.
talk. Let's talk about
Cheer me
the
up.
price action overnight.
Well,
Let's
so
talk about the
trading
price
last
action
night,
overnight.
yeah, and trading overnight, it was a sleeper affair. I was there pretty much for the most of the session until 7 p.m. And I'm like, you know what? It's slow. There's nothing going on here. I'm gonna go outside and play some ball hockey with my kids. So outside playing ball hockey, and then I get a message from my buddy, get back to your desk, get back to your desk. I'm like, oh, so I'm hurrying back in, get inside, log in, and the rumors of the India deal. So then you can see right around 7:45, S&P futures start blasting off, and that's the rumors that we've got a deal. We've got maybe a deal with India, and futures blast off from there. Went up further overnight, starting to leak here a little bit. We don't have an official deal here yet, but we do obviously. It sounds like they have the framework for a deal, which is good news. So we knew the market would
Yeah.
pop on deals. That is what we had, but a little bit of a muted response here. I want to get Christian's thoughts here because you do get the deal, or at least the framework for a deal. Market's a pop, but not a lot of follow through here right now.
Yeah, another one, right? That's getting close. I think one of the we started hearing possible deals with, I don't know, maybe Mexico, Israel, Japan, which was met with over the weekend, but and now another one, it sounds like it's just making progress, because
Yeah.
it feels like there's a lot of issues with these things, and I think also I was just reading this a little bit, last night about how difficult and how many details like are going to needed to be done with each one of these countries in terms of a trade deal. And like, I don't know, I think that the expectations are too high in terms of these things, like boom, let's get a trade deal, and like all of a sudden, like all of these issues around trade, which is very complicated. And listen, I'm not a trade expert by any means, but it just sounds like, the more that you're kind of just reading from people who are, it's like, hey, these are really complicated situations. And
Yeah.
I don't know, I mean, can you really like pull off something that says like, oh, we agree on all trade principles? Like, I don't know, I think that's really tough. I think it's more trade progress, but I don't know, I'm more I've got a little bit of negativeness around like whether or not we're going to see things right away.
Well, and let's just talk about the price action here because the S&P futures did get the big lift, but we've leaked a lot of those gains back here now. I mean, yesterday's price action was telling as well. You got that commentary from the Japanese Prime Minister early morning that they just can't concede to all of Trump's wishes. And I'm like, well, that doesn't sound good. And then Trump also goes on the tweet storm, obviously with, Jay Powell and calling him a loser and like the schoolyard bully, and the markets are just like, holy crap, Japan doesn't sound like a deal's in place, and he's calling our Fed chairman a loser. So the markets just kept selling off. It felt like all day, just a steady leak of selling. Get the overnight pop back, snapback rally. Like, my personal thoughts is you just got a lot of overhead supply here. You got a lot of people who are buried on stocks trying to find a way out and probably looking, on rallies to lighten up because they've been hit pretty hard here. I think that's kind of what we've seen overnight, because we've given back a lot of the S&P futures gain here. Just give us your thoughts here, Christian, on how you're approaching from your trading perspective.
Light, and light, in terms of things that I'm doing, and it's just kind of watching. I'm really just kind of saying, hey, if there isn't anything that's like really jumping off the page to me, I'm trying to basically not put on positions here because it's, I'm just trying to recognize the trend. We talked a little bit about that yesterday. I think that we're still all of the price action is below all the moving averages. So to me, it just it just resembles to me like that the price action is that the trend is down. Also, again, I'm not defining bull market or bear market. I leave that to other people, but I do know what a bear market or a bull market feels like, and this to me just feels like a bear market. And
Yeah.
a couple of the characteristics that I've been throwing out is like, hey, like positive, like if you see like a good setup, good technical setup, it fails. You see breakouts, they fail. So, and also breadth. I think the up volume versus down volume yesterday. At one point, I think it was like 93% down volume. So
Yeah.
everything was getting hit yesterday, and those hiding places again, every once in a while, like we'll go through a couple days where some groups are doing well, like I've talked about, like the discount stores or like the Walmart, and we've talked about that in yesterday's session. But those names got hit pretty hard, like Costco got smoked yesterday. So to me, it's just really tough when you're getting like once a week like a clean out of everything. So that's how I'm approaching things. I'll look to be a day trader. The question I have for you, Dennis, is today another not turnaround Tuesday, but fade the or sell the rip today?
I think so, Christian. I think I approach it the same way here too. That and I'll say it. We're in a bear market. Like I want to say, I know people say, "Oh, S&Ps aren't down 20%." Dennis doesn't know what he's talking about. Dennis knows what he's talking about. He's traded 26 years professionally. This is bear market. We're in a bear market. Rips are getting sold. Rallies aren't holding. There's no follow through. Those are all characteristics of a bear market. By the time the media tells you it's a bear market, it's already getting ready for the next bull market. So don't wait to sell all your stocks until it's an official bear market, because you'll always be selling them near the bottom. With that being said, I think that's the way I continue to approach it, is selling into strength. I'm always, in all my strategies, buying dips, selling rips. But I mean, sometimes you're biased to more selling the rips and shorting the rips as opposed to just like buying the dips and getting long. People in the STN room keep, saying, well, when are you going to buy something long-term portfolio? What do you like? When are you rebuying your Tesla? When are you rebuying? I'm like, I don't really see a lot of need to hurry into stocks here. So, we've been saying there's the potential for deals. That's going to be the catalyst. We get, the framework for a deal with India here. The stocks pop. That's fading again, though. Like, so can we hold? Are we even going to hold up today? And then you just think about this administration, and they don't know where they're going, and they're wishy-washy on this. We do get more tariffs here today, too, which we can get to in a second on solar. But I mean, it's just uncertainty, and the market hates uncertainty. So I don't think I need to rush in. I'm 35% cash in my long-term portfolio, 100% cash. I will be again at 10 o'clock, or I'm hedged perfectly in my trading account. So I'm not, just rushing in and just loading up stocks here because we get this deal with India. I think there's more deals to be had, but there's a lot of still uncertainty here as well. Let's go maybe to the solar stuff, because Bremster, if you want to maybe just cover here, because we got solar tariffs here all overnight.
Yeah, so the U.S. is going to impose, or they're kind of finalizing the tariffs for solar imports into Southeast Asia. The number there is 3,500%. That's going to be the solar tariff into Southeast Asia. That's 3,500%. Yes.
First solar ripping higher on this. We do have precedence for this, though. And the precedence is, think about like when Nucor was ripping higher because we were going to get steel tariffs. And U.S. Steel obviously has its own stuff, so maybe it's not the best example because it's deal or no deal over there. But, I've just seen it in the past when you get this big pop, 8-9%, because, oh, yeah, tariffs are going to save the company, or, or make its company rich again. Those are selling opportunities. So we see First Solar pop 8% here. Stock is in the gutter. Not far, didn't close far from 52-week low. Overhead supply all over the place. I mean, the other solar stocks, we can talk about them too, like an ENPH, which has just been an epic disaster. SEDG, which has just been an epic disaster. Christian, solar has just been a sell the rip here for years now.
Yes. Yeah. And if you don't like this this is an easy one to me. All these things bouncing this morning. I have heard people talk about like as a trade idea going long some of the solar names because of this tariff issue. But yeah, I mean, you're dealing with so much overhead supply. You're getting a nice move up. I was just looking at SEDG. I would watch this level of $12 in SEDG. All these names are going to be reporting earnings soon too. But First Solar, I see resistance up at 135, and actually right where we are is I'm looking at the 1 hour 4-hour chart. We're at last week's highs, so a great place to sell. I don't know if you really want to be greedy and go for that 135. I think you got a really nice move here, and yeah, I would be taking your taking profits if you kind of position into these things. When does First Solar report earnings? But to your point, just massive downtrends in these things. I would
Yeah.
not be interested in any of this stuff except for this type of trade. I think we've got earnings coming up at the end of the month. So the 29th, which is, by the way, is the end of the month, is rapidly coming up. But yeah, I mean, congrats if you were holding some of the solar stocks and looking for this type of announcement. But I would be ringing the register personally.
Yeah. It's just everything. Like when you just look across the board, it's just hard to get excited. I know we have Brian Shannon on the show every once in a while, and he just talks about, and you do as well, Christian. You talk about this all the time. Stocks trading below 200-day moving averages. Not that you always say nothing that great happens below the 200-day moving average. So I mean, if you're rah bullish, I mean, sometimes it's just good to sit this one out. And maybe I'm going to be doing the same thing. From a long-term perspective, it's like, I got some stocks. I'm getting beat up a little bit here, but I got a nice little cash cushion too. I don't really want to lose that cash cushion yet, And again, everybody's worried they're going to miss the rally. They're going to miss the rally. The only reason that we would rally like the 10% one day, which we've already seen, is if Trump said, no tariffs. We're just not doing tariffs now. Tariffs are done. He's not going to do that. The best we got was the 90-day kick the can down the road. So until Trump actually says, yeah, I think tariffs, I think it was wrong, I think we should just back down, and it's just not the place for tariffs, I think the market continues to have pressure on it. So I've got to just sit this one out, meaning I'm not adding to my U.S. positions right now. We've talked about international, that's held up fairly well, but still overall, the U.S. seems to run the world for the most part. And when the U.S. stocks are suffering, other stocks usually suffer as well. So I think I'm still just in sitting on hands mode in the long-term account. 35% cash. Pretty happy that I got some cash.
Yeah, and I think it's a good point too to mention that everybody seems to be on edge or trying to call this, when it's going to be a great time to buy. I think that we're still not like washed out enough in terms of that sentiment. Like I think sentiment has gotten to the place where, okay, finally, like people have said, as you
can't
mentioned,
take it anymore.
Yeah, like this is a bear market, and I think people have finally are starting to kind of embrace that a little bit. But I still think there's the buy the dip mentality is kind of just is still present. The equity put call ratio, I was just going to bring that up because I've been watching this, not every day, but finally, let's see if I can bring this up. All right, let's see if I could share the screen. But actually, I don't think it's equity put call ratio 0.67. So, and I mentioned the up volume versus down volume. If we would have gotten below, or upwards of down volume above 90%, then that's like a technical signal. But again, we're just not getting there. So I think it's just going to be, this is a process, I think, of just getting there in terms of sentiment completely getting washed out.
I just want to reiterate what you were just saying because it was a good point again. Just sentiment, like being washed out. Like I don't see any of that out there. Everybody is still thinking, when am I buying? When am I buying? When am I buying? Bottoms don't happen when everybody is still bullish. And you can say, well, but look at these sentiment indicators and 82% of people, have fear out there. I don't feel it, man. I'm never getting questions like, Dennis, are you selling because I just can't take it anymore? I haven't had that question to me once, not once this year. Or like, I just can't take it anymore. I better just sell. Not once. I've had that question. What are you buying? At least it feels like a dozen times a day tweeted at me. At least a dozen times. When are you buying? What are you buying? When are you buying Tesla? That comes every day. I get the Tesla because people know I sold it and people know I still got the long-term bullish thesis on it. But I get that question every single day. When I stop getting that question, then maybe we're getting close to a bottom. But I think we got to stop trying to even call the bottom here. Just take the market for what it is. We're in downtrends. We're below the 200-day moving average, as Christian says. This is not that much good going on. So even when we get these pops, if you're uncomfortable and you're puking your guts out on these down days, maybe use the rallies to lighten up. Maybe use the rallies to raise cash. And, and the other thing that's interesting today too is gold is up again, Christian. Gold is up again today. So we've seen gold going straight up because it's the flight to safety. We've seen, stocks going down, gold goes up. Well, stocks are up today. Gold is up again here. So, I mean, that's telling you something too, that, hey, if gold is strong enough to be up here again today, maybe there's still a little bit of fear out there and people are more comfortable owning the shiny metal than they are their stocks. So I would say this rally is guilty until proven innocent.
Well, if you want the buy the dip mentality, here you go. Not that you're getting a dip in, a real dip in gold, but I mean, every time it's been coming in just a little bit, it's getting bought. Like I was watching this yesterday, like middle of the day, and I was like, hey, maybe I put on a gold play, towards the end of the day. And I was like, I don't know. I was like, I don't think I still looked because I think gold at one point yesterday, GLD was up about 3%. And I looked at it and I was like, oh, there's a little dip. And I was like, it's still up about 2.2% for the day. So I was like, I don't know. I was like, I don't think I can do it. I buy gold up here, for just like a trading position. And lo and behold, like I would have been rewarded because that's where it was around like 1 or 2 o'clock yesterday. And again, it gapped up. And it's settling in here, but what do you see on this chart here? This is just a 5-minute chart. I see price action going from the lower left, or maybe not even the lower left, but the left to the upper right. I mean, that's an uptrend, and this is continuing to get bought. Can I buy it up here at this point? I've got a position on in my longer term account too, but I wish, like, in hindsight, I wish I would have been a little bit more aggressive with trading gold. And I've been in and out of a couple of the gold miners, but they're not acting the same way. I find that very interesting because I looked yesterday, the gold miners were, I believe, were down yesterday. And,
Yeah.
unless it's, so they're just not blasting off the same way. Very strong last week. But here's the 1 hour chart of GDX. And here's what I'm talking about. Like we started the day like, okay, but if you thought you were going to go long the gold miners yesterday, you could see that there's a decent dip. I mean, maybe that's the dip that you want to buy a little bit, is when the gold miners dip, because you're getting at least a little bit more of price action where it's not just kind of going sideways to up. So gold miners, something I'll be maybe looking at today. Here's the chart again. It's also extended, but I just wanted to touch upon and spend another minute there because that's what's really working in this market.
Shiny precious metals, the safety trade. What's also working, we should touch into it again. We did touch yesterday, is Bitcoin, though. Bitcoin,
Yep.
The great decoupling is what they were calling it yesterday. We started on pre-market prep saying, hey, it's a little bit, Bitcoin looks like it's decoupling from being just a NASDAQ stock, decoupling from the overall equity markets. And then it's like everybody's decoupling here. So, CNBC had it, and everybody's talking about the great decoupling. Great day for Bitcoin. Great couple of days. And agree, we were talking about it yesterday. It definitely is starting to decouple, starting to become that asset that maybe potentially can rise when equities are going down. It's up here again today. That's good news here too. Maybe it's doing its own thing. What are your thoughts here, Christian? Is this something, it's trying to get back up there to the 200-day moving average. Like thoughts, as we approach Bitcoin here, is there a trade here? Is there a no touch? What are your thoughts on Bitcoin?
I have to say I like the chart. So I think right now, just thinking about everything in terms of a trade or short-term trade, but I think you could go long here versus that blue line that I've got on my chart, which is the 50-day moving average. That lines up with the value area for April, which again mentioned right off the start here this morning. 88,270 in Bitcoin futures is basically what I'm looking at. And if you want to go a little bit like sexier, and if you want to look at MSTR, which there's still about of short interest of about 11%, and this, it's actually held up pretty decently. It still has the pattern of lower highs from when it had this like blow off top situation that happened like all the way back in November. I can't even remember back to November, but all the way back in 2024, you had this blow off top. It tried to rally a couple times in here, lower high here, lower high here, lower high here. So again, very like this is try to make these setups as easy as possible. If we get over this high from where we saw in March, then you've got like a technical turn here. but I'm watching it right here. It's on the top of my watch list this morning. Is what MSTR looks like, and possible quick trade in it. You could also watch. I think not yesterday, but yes, yesterday's highs. You could see that it did run into a little bit of resistance around 327. So that's a name. And if you don't want to go that, needing to go like an extra direction or a derivative of Bitcoin, maybe you just kind of keep it simple and look at going long Bitcoin or IBIT, which is the ETF, which is also just above yesterday's highs. So a little bit more relative strength in the actual cryptocurrency versus some of the derivative plays.
Earnings.
You guys want to? Yeah.
Yeah.
Let's start it off
think
with
the
the
rents are-
preview. Why don't we do Tesla?
Oh, you want us to? Okay, we can do that. We can preview
Yeah.
Tesla first,
Yeah.
and then we're going to go into the companies that reported here last night. Tesla, obviously, we looked yesterday. I think I saw a 26-point expected move. I'm too lazy. I didn't write it down. I'm too lazy to go and look and add it up again. The way you do that is just add up the calls and the puts at the closest strike available with the closest expiration available, which obviously the weeklies. Stock did not have a good day yesterday. Breaking down, it's not far from its 2025 lows. It's bouncing here a little bit this morning. I mean, I think, again, I'm just going to reiterate, I think the quarter number is going to miss. I think there's going to be Musk trying to talk up the quarter. He's going to talk to 2025. He's going to not even focus. He's like, don't worry about 2025. He's like, it's just noise. He's probably going to say it's all going to be about 2026, and he's going to be about robotaxi and full self-drive and Optimus. He's going to really cheerlead the stock, I would imagine, on the call. Also is, the question of, how's the progress with Doge? Are you nearing an end there and coming back to Tesla full time? The market wants to hear that as well. So those are potential positive catalysts when I think the quarter actually is going to miss. There's that potential where Tesla could fall on the weak numbers because the algo's pricing nothing, and then potentially bounce back on the call. We've seen that happen before.
Yeah, it's a pretty decent move that they're implying. They're implying an 11% move, so it's $25. And
Yep.
the last time it reported, it kind of just smells of like maybe just sell some premium here. The last time it reported, it was up 3%, and Elon saved it last time. I believe Tesla was down after they reported earnings. Initially off the numbers, Elon comes onto the call and talks it up, and the stock finished up 3% going back to January 29th. The previous quarter to that, the stock was up 22%. So, yeah, I mean, we know that the delivery numbers and those have, we just had those in the beginning of the month. Not good. I think what everybody is looking for is that if there's going to be any mention of how much longer is he going to be working with Doge, and
Yeah.
the more particulars that you hear about that, and the closer to expiration for that job, the stock has a chance to rally. If he doesn't mention it, I think watch out. And but I think that's a big move that it's implying. I think that it can move decently, but I don't know. That's a lot of that the market is implying. Makes it tough to trade given that move. But I don't know. For me, it kind of means look to maybe position into something where I can sell some premium given the 11% move that the options are implying.
Well, that might be that's a strategy that we don't talk about that much on here on the show. I'm primarily an equities trader, but I mean, in this market, where you've got stocks, maybe you're going to get some deal pops and you're going to get some worries here. But I mean, overall, maybe this is the market you should be bringing premium. If you think, maybe sideways action is in store. If the market tanks, you're going to be happy, or you're going to be sad you just didn't sell stocks. When the market rips, you're going to be happy. You're not going to be happy that you wrote those calls. But I mean, if we end up just going sideways here, at the beginning of the year, I thought we could have a sideways year, and then tariff tantrum happened. And, that looks like it's potentially, at least at this point in time, off the table. Joel's full on bearish. I mean, nobody got this market right more than Joel. He wanted to sell everything, and he was absolutely right to do it. So I think there's a strategy there. Maybe we should be looking, at options and saying, hey, Tesla's giving you a pretty good premium here. Maybe if you got the stock long, I don't think it's a situation where Tesla just blasts off. Maybe you do take in some premium.
And I think also from like more of a fundamental view is, can he talk more about AI and how that's a positive for Tesla with the robots, and when are those going to be used, or what's the update on those? So any new type of business products or enhancements or timelines for any of that stuff could help a bit. So I think definitely people are going to have a lot of eyes on this one. So I think it's good to kind of preview this one for after the close today. But we also have a lot of names for that that we got this morning too, particularly like in the defense space.
Yeah, tons in the defense space. And I mean, we can maybe start with probably the one that's down the most this morning is Northrop Grumman, NOC. It's down 47 bucks, 9% here. Stock went out not far from its all-time highs. I mean, stock sitting up near all-time highs reporting in this earnings season has not been a great idea. I know we didn't talk about this one yesterday, but, I think if your stock's near an all-time high, even, if it just seems like they eventually come for all stocks. So I don't want to own stocks near all-time highs. It's down 47 bucks, getting hit. We already saw Lockheed Martin get hit, last week or over the course of the last couple of weeks here. So they come in for NOC. Brentster, do you have the numbers for NOC?
Yeah, sure, dude. They reported on the bottom line 606. That was a miss. 626 was expected. Sales also missed, about 5 billion. They did cut their fiscal year 25 earnings guidance, but they did affirm their sales guidance.
So slightly down, but I mean, this market does not want to see guidance cuts, especially when you're sitting up near all-time highs. And then we get the other ones all reporting too. We get RTX reporting here this morning, which we can bring that one up as well. I might as well cover them all together.
Can I just jump in real quick?
Yeah,
I just
yeah,
want
go.
to mention that's a great point that you mentioned about like what's happening with names that are sitting around the highs. It's not the same thing, but it reminds me a little bit about what happened to UNH. Look at what happened to UNH when this was sitting at, was doing pretty well, was kind of one of the hiding places, and the stock was sitting at those very close to all-time highs, and the stock gets absolutely annihilated. Why do I mention this? Because I would be very wary too, and like I think it's a trade idea that you might want to consider. If a name's kind of sitting up here, the reward is more to the downside than it is to the upside with some of this price action. So I would pay attention to that. If you're looking to play some of these play earnings, I would be saying, hey, has this name been a hiding place? Because now it has to show something very strong and quantify, where the price action has been. And if they're going to say something negative, they're going to get brought down like this. So very interesting. We can move on, but I think great observation that you're bringing up.
Yeah, and there is quite a few stocks still sitting that have been hiding places. You think about like the insurance stocks; some of them have held up fairly well. Like you said, UNH, held up forever before it just got whacked 2 days ago off their earnings. So I think you got to be very cautious. Like I know everybody is, and learned over the course of years, we want relative strength. Stocks that are trading up near the highs, those are the ones we want to be in. Those are the ones that are going to continue to show strength. It's not that market. When you are in a bear market, they eventually come for everything. So I know people are hiding out in the staples right now and saying, well, I know I'm safe in Coca-Cola. I know I'm safe, in like, all those other defensive names like Procter & Gamble. Like those ones, they don't go down. No, you know what? If the market gets ugly enough, they all go down too. You know what's safe is cash. Cash is safe. Or is it? I mean, US dollars are going down too, so it depends on what type of cash you have. But just keep that in mind. What Christian's bringing up, obviously stocks near highs, they got a higher bar. So that's an issue as we enter this earnings season and we're getting into the heat of it. If your stock's trading up near a 52-week high, I'd be a little bit cautious taking it through earnings.
I wanted to cover one more right before our guest, Mish, which I'm excited to hear from her. But this is interesting because 3M had mentioned something different in their earnings report. And 3M is catching a nice reaction. But, we know that the tariffs are going to be definitely are going to be mentioned in some of these earnings calls, and I think it's going to be very notable about what some of these CEOs say. But here's one: 3M actually comes out and brings up a new term for us, calling tariff sensitivity. So I'm going to repeat this again: tariff sensitivity. They see 2025 adjusted EPS tariff sensitivity of 20 cents to 40 cents. So they're actually trying to quantify what the impact of tariffs could be on their business, and saying, instead of, like, we heard this from, who was it, United, who gave like a good scenario, bad scenario based on what the path of tariffs could be. That was one way of breaking it down. 3M went, maybe the stock's just rallying on that alone. It's like, hey, they're actually quantifying what the risk is to their earnings with something called tariff sensitivity. What do you guys think about that?
Yeah, I think this is going to be a theme this earnings season where companies are going to be cautious with their guidance. And, we saw UAL give two different scenarios, one with tariffs, one without tariffs. And, tariff sensitivity is another way to put it. I mean, so the companies are going to obviously, when they come out and they actually miss, this is going to be an excuse for some of these companies as well, saying, well, you know what, tariffs are tough. So this is, what tariffs have created is like the COVID excuse back in the day. It was like, well, it's COVID. Well, it's tariffs. So tariff sensitivity. I like that they're quantifying it though, because we don't see a lot of companies coming, and I like that word, tariff sensitivity. So I do like the transparency from 3M, but I think it's going to be a theme this earnings season. I think a lot of companies don't know. And I mean, imagine being the CEO of a public company, and you guys are trying to come out with guidance, not knowing even where we're going with tariffs. And it impacts these companies tremendously. So it's interesting.
Another one from this morning, Lockheed. This is how they said their like price sensitivity thing or tariff sensitivity thing. They just said 2025 outlook does not include the evolving impacts of tariffs or the related recoveries. So I think this is, kind of a boiler. They're either going to do, what 3M said, tariff sensitivity, or they're just going to say we can't include this stuff because we're just not sure. I expect that we're going to see a large majority of the companies doing something like that this earnings quarter. All right, folks, let's bring in our guests here. Here we go. Good morning, Miss Schneider. How you doing?
I'm doing great. Brent, I just saw your chat. Sorry about that.
You are totally fine. It is very nice to see you twice in 2 days. You were on STN last night talking to us about commodities, but I think this morning we're going to stick more with equities, huh?
Yeah, definitely. And I know I've been listening to you all, and I know how chaotic obviously everything is. And we're very light in terms of positions. We're still in a lot of cash. But I have seen potential, forgetting about all the news and the tariff situation. I'm seeing a little bit of potential, particularly in the indices. If you're looking at Qs and if you're looking at the S&P, if NASDAQ gets over 19,000, I might get a little bit more optimistic. If the SPY can get over, the S&P 500 can get over 5,400, same kind of thing. So that's kind of, I'm waiting for something to give me a really good technical reason with an absolute bottom line support level to hold before I start piling back in.
Mish, I think you're not the only person waiting here. Like, this is the issue that the markets maybe have, is that there's a lot of people, a lot of excellent traders on Twitter. I've talked about Brian Shannon before, and obviously Christian Fromhertz, that are a little bit, when stocks are trading down below their 200-day moving averages, they're not really all that keen to just come in here and start calling the dip on everything. So there are so many traders who have, read the books like How to Make Money in Stocks. And obviously, these are momentum type strategies. The market doesn't have any momentum right now. So there's so many traders probably just sitting out here. How do we get to that point where the momentum comes back in? Like, who's going to be the hero and say, this is enough, I'm buying?
Well, I hope that the three of you and me are part of the hero pack. But no, actually, I read today Goldman Sachs put out a report that retail space is buying every dip. Even though you're talking to the ones who are more experienced and obviously probably a lot more cooler in terms of waiting for particular signs, people still think that this is a buy the dip type of scenario. And so some will say, well, and we haven't had that capitulation yet because those people that keep buying the dip haven't really gotten murdered. And I don't know if I necessarily buy into all of that, but for me personally, that's why we talk about the economic modern family, right? Because they've been my guide for so many years. And, that's of course talking about the small caps.
Yeah.
We're talking about retail, transportation, semiconductors, biotechnology, regional banks, and of course our newest member, which you and I talked about a lot yesterday, which was Bitcoin, which is looking so exciting to me right now in terms of the decoupling. But if you watch the internal sectors, the inside sectors of the US, we'll get a real idea whether or not the tariffs, in terms of the impact they're having to the consumer, for example, or to small businesses, has been sort of behind us, whatever the reason is, whether people come to the table, whether Trump pulls back, or whether it just becomes yesterday's news. You know how that happens in this market. We'll know by looking at the charts of these particular family members. And right now I'm uber focused on the retail space, because it was what let us down in January. And it most likely will be the sector that tells us things are okay now.
Well, let's jump into those retail stocks. XRT, for instance, just sitting down here, not far from a 52-week low. Hasn't been going down the last few days either, though. So there is a little bit of relative strength if you squint your eyes really closely at the XRT. Look there. But I mean, you break down, you look what's in the XRT, and it's all, obviously, you got Costco and you got Walmart, which have been best of breed. But then you have a lot of mess. Target's been an absolute disaster. We know the Macy's, Kohl's. Macy's gets another downgrade today from Goldman this time, I believe. Kohl's, it's just been, kind of a disaster. TJX has been the best of breed for a long time on the off-price retailers. But I mean, XRT is not showing me a hell of a lot of life here, Mish. So what are you looking at here on it?
Well, essentially, I'm looking at two things. Number one is I'm stepping out and looking at the monthly chart. And XRT, I mean, a lot of different indices and sectors are like this right now. But XRT in particular, since I said that's been the thing that's held my interest in terms of where we're going to start to see buying coming in terms of economic buying, not just stock buying, has held a very key area. It's the 80-month moving average, right? The only time in years and years and years that it broke that was briefly during COVID, and then it came right back through it. And so right now that level is 64, and XRT is trading at around 66. We tested it, but we held it. What that number tells me, and this is not just technical reading, but it's actually really tied to business cycles, is that in a 6 to 8 year business cycle, we are holding up in terms of whether it's weak growth or whatever. At least we're holding up from going into major recession. And so that's my line in the sand. If we can hold 64, that would be one thing. Clearly, if we can get up through 72, now we're back over some of the more short-term moving averages. And that's going to tell me that it's real. Okay. So what I might do if we can get over 66, 67, 68 in the next couple of days is start looking at different names. And of course, for me in the retail space, I still think a major trend that got hit a little bit with the recent down moves in the market has been the vanity trade. So when I looked around the board yesterday, I saw ELF, looks like it might be trying to base Etsy, AbbVie, which reports tonight, I believe. Kohl's, you just mentioned, didn't look that bad. Ulta actually has been holding up really well. So all the stocks that are sort of tied to the diet drugs and the impact on that, without getting about whether or not we think they're good or bad or whatever, there's a lot of controversy with that. Doesn't matter. I know a lot of people on them. And I did a piece actually yesterday on Viking Therapeutics, which also reports this week. I think if we start to see some kind of bounce, sustainable, at least we have a direction. And from that direction, maybe that would lead and get a lot of the anxiety to dissipate.
Hey, Mish, great to see you. And the vanity trade in a recession. I don't know. There's got to be a really catchy joke in there someplace. But you're absolutely right. Ulta's like, I was looking at the stock the other day and like, hey, it's not doing bad. Elf has been an interesting one too. So are you going into some of these areas where I know like Elf originally like got hit hard because they have exposure to tariffs? Are you going right into the eye of the storm, eye of the hurricane with some of these names and saying, hey, these are good quality names, possibly some good news is going to get these things to fly? Or I saw I believe another name that was on your list was Kroger, which is the absolute like opposite right now. People have gone into Kroger, which is at new highs because of like a safety trade, recessionary type trade. What do you think right now is like a better place to kind of position in for something to kind of change?
Well, yeah, look at that Kroger chart. I mean, that's just beautiful. And we did not buy Kroger, but well, let's talk about the vanity trade, right? So, in terms of a recession, I mean, we know everything gets hit pretty much in a recession, but we do know a couple of things. Is that people will still want to feel good about themselves, and so, and it doesn't matter. We don't even have to be gender specific. People will spend money on health and fitness, and nutrition and skincare and hair care, regardless of what the economy is, unless we go into a major depression, but I don't think that's going to happen. And so if we avoid a recession, those stocks are already poised to go up. And even if we go into a recession, we could look to see after everything drops, what happens, what's holding up. So I actually had bought Ulta and I had bought Elf. I had bought Novo Nordisk, but I'm out of all of those. I made money in Elf. I made money in Ulta. I lost a little money in Novo because it had that big gap down and I got out that day. But the point is that I took a little taste and I did it actively. So now I'm back interested again in those areas. I think I'd like to see at least a little bit of the round of the earnings in that. I said Abby reports tonight. That was like one of my top picks. 160 is such massive support in that stock that I want to see what happens here after that reports. I want to see what happens after Viking Therapeutics, because that's going to give me an idea of the taste people still have for these diet drugs. And then I think that's why I'm calling it vanity. Then I think I'll have a better premise for Ulta. I'd like to see it get through 380, actually. Elf is holding 50. I think that's a really good sign. But I don't need to jump in right now. No FOMO right here. As I mentioned, we need to see things settled. NASDAQ, is not that far from 19,000. Maybe it gets there. Maybe we can see the 5,400. But getting back to XRT, that's going to be key. Transportation is going to be key. And the small caps are going to be key. And that also kind of held 183 in IWM yesterday with that terrible down move in the rest of the indices. So like I said, I'm optimistic, but I'm certainly going to be cautious until I see a little bit more evidence. And of course, the interest rates also. I mean, at this point now, we can't see yields go up much higher either, because I think that would be a negative.
Yeah, I mean, maybe we should jump into the TLT just here for a second here, Mish, and cover that as well, because we're up here a little bit this morning, but we are right perilously close to 52-week lows in the TLT, not seeming to get much lift whatsoever. I don't know if this is, an indicator that the Fed may be, just kind of sitting on their hands and not doing anything, or if this is, people starting to sell everything in the U.S., including treasuries. But, the TLT going down when the equity markets are going down is something new for me. I was talking about this with you in the SDN room yesterday. I mean, this is concerning to me, to say the least. I don't like seeing, normal markets, when equity markets are falling, TLT rises because it's flight to safety. They're not using long-term treasuries as flight to safety. Thoughts there?
Well, right. I mean, this has been the war now between Trump and Powell in terms of some people think that the Fed and Trump are trying purposely to knock the market down so that the Fed is forced to lower the interest rates. And we haven't seen that happen because obviously the Fed is worried about inflation. And they have some good reasons, but also they could be a little bit, people say maybe they're too late. I don't know about too late. But, in terms of the signs of inflation, other than the gold prices, which has backed off from 3,500 this morning, we're not seeing the silver gold indicate inflation. The dollar has fallen, but it's still at 2022 lows. It's not really crashing. We're looking around at the food and the grains and the softs. They're holding, but they're not really showing us signs of inflation. Certainly oil, even though it held $60 a barrel, that's certainly not inflationary. So it's possible that once the Fed watches, just like we are all watching, then they may decide to cut the rates a little bit here, because the CPI, PPI last month was pretty good. PCE, we'll see. But doing nothing for them right now is probably exactly why we're saying we're not doing very much. It's a volatile situation that we have to see settle down.
Mish, I have a chart of gold up right now, GLD, which is selling off a little bit here in the last half hour or so. Are we at the point where gold is getting to the blow off top type phase, or what is your viewpoint here, and what do you think you should do with gold at this point?
Well, we took some profits in gold on this last rally up, and we'll have a trailing stop. I think at this point, gold has been such a technical trading vehicle for the last several years. It's rallied, based out, rallied, based out, rallied, based out. And so we've had finally somewhat of a parabolic move, and that's why people are looking for the blow off top. This is typical with commodities that will happen. I mean, if you go back to 1980, gold shot up like crazy, and then it was like the top tick, and then it drops just as fast. I don't know if we're going to see that kind of sell-off in gold right now, but I wouldn't be surprised to see it go back down, let's say, to 3,200, only if, again, everything else is supported. We see the indices flatten out a little bit, maybe rally some. We see some of those inside sectors rally out a little bit. The dollar stops free falling. Then gold might, the people speculating in gold might say, we can look elsewhere in the board, because right now gold's been the only safety play, and we know that can change on a dime. So I would not be buying gold up here. I'm sorry, I just want to say one last thing, and then you can ask. Gold silver ratio, I'm all about that right now. And that topping out at 104, 105, that would be interesting to me too. If that starts to break back down under, let's say, 102, that would probably mean that gold's fumes have run dry, and maybe it's better for silver. But we'll see.
I was going to ask you, because you mentioned Bitcoin, and we talked a little bit about Bitcoin, and do you think it's better to play at this point? Let's just bring up, because you can see Bitcoin is now outperforming here this pre-market, and gold is coming in here. Do you think it's better to just play Bitcoin outright, or would you look at it like a derivative play like MSTR, or even like a Coinbase or a HOOD here?
Well, first of all, I saw a couple of people post this morning on X the ratio between Bitcoin and gold, and they said it was breaking out. So I thought that was interesting, because we had already been buying Bitcoin. So to answer your question, we didn't buy it through the coin. Actually, Dennis and I talked about this yesterday. We bought it through IBIT, which is a pure play to Bitcoin, more so than BITO, which has a higher dividend. So that's one way to look at it if you don't want to get involved with a micro strategy or what have you. I was a big trader in Coinbase for the last couple of years, and I haven't really touched it this year. I like that it held around 160. I know it broke that briefly, but it's been holding over 160. I think 180 could be an interesting test for that. MicroStrategy is so volatile. It's a great short-term trading vehicle. So if you want to just stick with with Bitcoin itself, I like IBIT because it doesn't keep you up at night. It's very technical. It's been breaking out. It's over 50 right now, pre-market. We bought it around 44. We took a little profit yesterday just because, we like to do a sort of a 3-to-1 ratio in terms of risk to reward. And I'm going to sit with it for now, because it looks to me like Bitcoin, if it gets through 90, 95 is probably around the corner.
That's me, Schneider. She's been coming on our show for years here, chief strategist at MarketGauge. We always appreciate all your thoughts, the Modern Family, everything here, Mish. Joel, I know, was disappointed that he couldn't be on with you here. Obviously, Joel's off this week. You're one of his favorite guests. So, Mish, we'll have you on again real soon.
Thank you, guys. Thank you so much. Have a great day.
Thanks, Mish. All right,
So,
guys.
Christian.
Yeah, look
It's
at
me
this.
and you again.
Me and you. And so gold is selling off here. And you've got the opposite happening in equities. Equities are going up. So
Yeah.
what I find is just when we've got a relationship, relationships always, you're the relationship guy. But sometimes relationships kind of stick, or sometimes there's something new. But yeah, I mean, it seems like all or none right now, gold or equities.
Yeah,
Maybe
well,
Bitcoin's
and
trying to
this
throw its
morning was
ring.
interesting when we started the show. I was like, gold's up 1%, equities are up 1%. I'm like, dogs and cats living happily together. This is weird. So we're starting to see maybe the traders are coming to their desk and saying, look, gold shouldn't be up on a day that the markets are ripping higher here. So I think maybe cooler heads prevailing and selling gold off a little bit here, because that inverse correlation definitely exists here right now. So, you did point out that the miners can sometimes do their own thing because they are actually stocks. So, sometimes there can be that, differentiation. When stocks are really getting hit, miners will probably outperform the actual precious metal itself. But, at least that's healthy. I was somewhat concerned about the market rally this morning because gold was so strong. But now that gold's selling off, you're clearly seeing that money roll back in equities as we start to approach, the highs of the session here. So we're moving back up. And really, if we move away just from the gold for a second here, Christian, I'm just looking, underneath the hood. It's tech kind of taking charge here now. When we started the show an hour ago, like everything was up 0.7, 0.8%. Now you're starting to see separation here. Now you're starting to see like some of the staples are going red. You're seeing obviously Verizon, AT&T, which we reported, and we can talk about those earnings in a second, from Verizon trading down. But you're seeing, stocks like NVIDIA, which were actually not up that much this morning, now up 1.34%. And Apple, is trading up at 1%. Tesla's up 1.25%. We've got Shopify 1.54. I'm just, cherry picking some. But I can clearly start to see that tech is starting to take charge here a little bit this morning. So we should dive into those earnings. Let's dive into a few of these reports here. We've got about 3 minutes here left. I did tease Verizon. I think it's important to cover it because Verizon obviously is usually inverse correlated with the overall market. It trades more with bonds because, one, it has a 6.66% dividend. Basically, everybody that's in Verizon is in it for the yield. So it trades more bond-like than stock-like. But it did report earnings here this morning, and I'll give you those earnings as well. The earnings were, grabbing it, $1.19 versus $1.15, so they did beat there. Also, just looking here at guidance, and man, there's a lot to chew on here. Revenue growth 2 to 2.8%. Estimates were kind of there. Q1 revenues 34.48. I'm just, it's a lot of stuff here, but the guidance looks a little bit light to me. And I think, it's also a fact that, hey, this is a risk on day, and Verizon is not a risk on stock. Any thoughts here, Christian, on Verizon and the tape action, even going into the print?
Nah.
I can always pass.
Listen, I would say watch 40. Like, I don't want to, in case anybody's watching this name, it's not a stock really for me, but $41 would be something to watch to see. You got a dip in here, and it's retesting last week's lows. So I would watch the 41 level if you like Verizon here.
Also reporting, which we teased as well, was General Electric. It is trading up 4.47%. That's a pretty good move here for GE. Just going to grab you the earnings here. GE Aerospace, the earnings. Trying to grab the earnings. $1.49 versus $1.26. Sales were in line. The guidance is kind of there. The outlook reflects tariff impact and delayed engine deliveries. So they're saying 510 to 545 versus 542, but they're saying their outlook reflects the tariffs. So that is slightly light on guidance, but with reflecting tariffs, it sounds pretty good. They didn't do the 2-case scenario. So worst case scenario, they'd just be a little bit light. So that doesn't sound that bad. GE trading up here, up 8 points, getting a nice pop back, 186. Again, I don't know if I'm in the market where you want to chase everything here, but, it's nice to see, stocks trading higher as well on their earnings report when they're decent.
Yeah, I mean, I like this transparency, or not. I shouldn't say transparency. That's probably not the right word, but at least they're trying to quantify like what the impact is. And we talked about 3M, but I think companies are getting rewarded a little bit. Like you try to at least give the ultimate investor at the end and say, okay, how is this going to impact us? And I like that they're trying to give you a sense of like where this could lead, rather than come out and say, geez, we don't know, we're bringing in our guidance because this is too uncertain of an environment. I think these companies that are trying to give it a shot and say, okay, this
Yeah.
is some type of some type of a situation where we can quantify. Sorry, there's a headline that just hit the tape, and that headline is IFM cuts
What do you got?
2025 global GDP growth forecast to 2.8 from 3.3. So everybody bringing in some of their their estimates. We've seen brokers do that with S&P targets. Now
Yeah.
the IMF is cutting their price target, or not price target, but GDP growth rate. So there you have it. Everybody cutting.
That continues to be the case. I mean, this is uncertainty over everything. So GE giving us a little bit of more certainty though in their report. There's a bunch of others that reported here, smaller companies. We did hear from home builder PHM. We did hear from Halliburton, and what a disaster. I want to just touch quickly. We have 1 minute left on China. We're getting a good move in the FXI here this morning, trading up pretty substantially here, up 2.6%, led by Alibaba. Up $4 here too. I still have a small BABA position. I sold most of it up at 130. I considered rebuying it, but I mean, I've been sitting on my hands in my long-term portfolio for a while here now. I want to get your thoughts because I know you got down during this a couple times here, Christian. You getting interested in Alibaba at all?
I cut ties with my China exposure. Am I looking to get back involved? Maybe. I would watch 114.78 in BABA, but I just view that this is just a whole nother thing. I don't, when they start talking about how like the currency effects of what's going on in China, and whether or not like what if they're starting to kind of uh you know move their currency and intervene with what their currency is doing, I kind of just say, wow, that's getting a little bit above my pay scale, and I kind of just step away from countries that are having to come in and intervene a bit in their currency market. So, but in terms of keeping it simple, watch this 114.78 level, because you do have a dip now in all the China names. They've come down pretty decently. Baba's sitting down here. It is, I would say, what's a little bit different than a BABA versus US tech is that this is sitting above its 200-day moving average. Even though it's had a really big pullback, it pulled back to the 200-day moving average and it held it. So that's a little bit, I would say, technical strength there, showing that the China names are still in uptrends. So that's a real nice catch at the 200-day moving average. Now I would watch for maybe to see if price can start to reclaim, like this is just a 5-period moving average, and it looks like it's going to do that. So I kind of like what you're hitting at here with this move in China pre-market.
All right, folks, we're going to kick it over to the STN Network, StockTraderNetwork.com. Come join us. We got another hour of programming. We got Christian's Corner at 2 p.m., and then Dennis and I are going to be back at 3:30 for the close. Join us over there, folks. If not, we'll see you tomorrow on Pre-Market Prep. Everybody have a good day and good luck out there.